I tripled my money investing in this oil stock, and I believe I can triple it again. That's why even after achieving a remarkable 208% return, I'm still holding it. And in this video, I will share this stock with you and explain why it can reach even higher prices. Now, today's stock belongs to the oil shipping sector. Tankers, though often overlooked, play a crucial role in the global economy. Without these massive ships, supply chains would come to a halt and you wouldn't be able to buy gasoline. And I discovered the tanker investment opportunity in early 2021, when these companies were being beaten by the market. But after perceiving the enormous potential, I decided to invest some money in these stocks. After all, something massive is happening to this sector that is turning these companies into cash flow machines. You see, tankers are far from being a good business. The growth is inconsistent and you have to deal with a lot of depreciating assets. Besides, this is a highly cyclical industry. But every now and then, tankers make some serious amount of money, and we will soon understand why. But first, to get a picture of how this investment story will play out, we need to comprehend what has happened to this industry in the last decade, and pay attention because this is quite an interesting story. Now, first, let's go back to the early 2000s, when China took the world by surprise with its explosive economic boom. Factories sprang to life, cities emerged overnight, and the thirst for oil became insatiable. This spike in oil demand meant a urgent need for more oil transportation, which meant more tankers. But here's the thing, no one saw this coming, and no one was prepared for this. The world was caught off guard, including the ship owners. So, while China's economy was taking off like a rocket, the number of tankers in the water was laughably insufficient to meet the surging demand. So, while in 1994 freight rates were around $20,000 per day, in 2004 they jumped to around $80,000, $100,000 per day for a VLCC. It was the golden age for tanker companies, and owning a VLCC was like having a license to print money. Now, if you don't know what VLCCs are, let me break it down for you. VLCC stands for Very Large Crude Carrier. These ships are giants of the seas and can stretch over 330 meters, bigger than the Eiffel Tower, and each vessel has the capacity to carry around 2 million barrels of oil in a single voyage. That's right, 2 million barrels. Now, the problem with these giant vessels is that, while they are essential for transporting the black gold across the globe, they are also extremely pollutant, leaving a significant environmental footprint. And keep this in mind because later this fact will be important for our story. What you need to understand is that these tanker companies suddenly found themselves swimming in profits. And naturally, stock prices went through the roof, with some companies delivering returns of more than 1,000% by 2008. The problem is that, like any profitable venture, the booming tanker market attracted a ton of investment and, as a result, new ships flooded the seas, creating an oversupply which, in turn, caused freight rates to plummet. So if in 2008 freight rates were around $80,000 per day for a VLCC, after that, they nosedived to the $20,000 range. Actually, in 2013, the situation got so bad for tanker companies that rates reached as low as $15,000 per day for these giant ships. So suddenly profits vanished and tanker companies simply started bleeding money. And about what happened to those once super profitable stocks? Well, they crashed over 90%, remaining at these prices for a long time. But the thing is that, in recent years, the tide finally started to turn. But why? You see, for more than a decade, freight rates stayed at very low and unprofitable levels, which led many companies to bankruptcy. In turn, the ones that survived focused only on staying alive, not on expanding their fleets. And as a result, in the last years, very few tankers have been delivered. After all, these ships can cost up to $100 million each, and nobody wants to throw this kind of cash into a black hole of losses. Meanwhile, a lot of ships have been exiting the market. After 12 years, it becomes increasingly less advantageous to own a ship, as older vessels are generally fixed at lower rates and come with higher costs. Thus, because the older the ship, the greater the incentive for its owner to retire and scrap it. Additionally, tankers have a lifespan of around 20 years. After that, they either get scrapped or join the dark fleet, which is the unofficial fleet of tankers operating under the radar. The problem we currently face is that a lot of tanker vessels today are approaching this 20-year mark, which means many of these ships will be soon taken out of action, further tightening the supply of available tankers in the water. So, for example, in 2024, 133 VLCCs are expected to turn 20 years or more. On the other hand, only one vessel is expected to be built. And in 2025, we have pretty much the same scenario. So, while 29 vessels are expected to quit the fleet, only 5 vessels are expected to be built. Same thing for Suezmaxes, which are the biggest type of tankers that can pass through the Suez Canal. So almost 110 vessels turning 20 years or more, while only 4 new vessels are coming to the water. So can you see the huge problem we have here? Because on one side, new ships have not been arriving, while on the other side, the fleet is old and lots of vessels are exiting the market, which means fewer tankers will be left in the water, while oil consumption continues to grow around the world. So can you see how a perfect storm is setting up, as happened in the early 2000s? Because if the fleet doesn't grow and oil consumption continues to increase, well, this means that freight rates are gonna soar. And that's why I invested in Frontline, an oil transportation company that owns and operates one of the largest and most modern tanker fleets in the industry, consisting of 86 vessels, including 43 VLCCs, 25 Suezmaxes, and 18 Aframaxes. Frontline is listed on the New York Stock Exchange, ticker symbol FRO. And I invested $433 in 2021, and so far I've seen a 208% return on this stock. I bought the stock around here for $8.33. And this impressive movement in the stock price is a direct result of rising freight rates, which have been improving in the last 2 years, as we can see here in this chart. So freight rates went from $35,000 per day for a VLCC to the current $55,000. And the same happened for other types of tankers. And the higher rates go, the more money Frontline makes. With rates at $55,000 per day for a VLCC, Frontline generates $835 million on free cash flow. Now, for every 10% increase in freight rates, potential cash generation rises by approximately 19%. That's the leverage at work. So if freight rates jump to $72,000 per day for a VLCC, Frontline could generate around $1.3 billion on free cash flow. Now, what if rates reach $80,000 or $100,000? And of course, the underlying drive for this increase in tanker rates is the vessel supply problem. However, several geopolitical events have also played a significant role here. For example, the conflicts between Israel and Hamas, as well as Russia and Ukraine, have disrupted routes and increased the miles tankers need to travel. Now, we've already seen how fleet complications are affecting the market. But you know, no matter how bad things are, they can always get worse. And I say this because, well, remember the pandemic when everyone was stuck at home with interest rates near zero and stimulus checks rolling in? People started to buy all kinds of stuff online, which needed to be transported from one part of the world to another. This caused a massive boom in the container shipping sector. And well, you already know how the shipping industry works, right? When container ship owners started making a ton of money, everybody jumped on the bandwagon, ordering more container ships. As a result, the shipyards got packed, and so they remain until 2027. So even if tanker owners wanted to build new tankers, they wouldn't be able to start it until 2027. And do you know how much time it takes to build a new tanker? Around 2 years. So in the best scenario, new tankers would only hit the water in 2029. And as if all of this wasn't enough, there's another complication. Remember I told you tankers are extremely polluting, right? Well, nowadays we are all trying to become greener and more environmentally friendly, and this trend reached the maritime sector. After all, container ships and tankers are major polluters, each vessel releasing as much pollution as dozens of millions of cars. That's why the IMO 2030 regulations emerged. The goal is to reduce the maritime industry's environmental footprint by 2030, and to achieve this, tanker operators will need to adopt cleaner technologies and alternative fuels. But here's where it gets tricky, because compliance with these new norms is both complex and costly. Meeting these new operational requirements demands substantial modifications to existing tankers or investments in new ships designed to handle these new technologies. And these things are far from being cheap. Consequently, these financial burdens are likely to influence a lot of fleet renewal decisions, and many operators might just find it more economical to scrap the older, less efficient vessels rather than invest heavily in upgrades, which results again in less ships in the water. So not only are we facing a shortage of tankers due to packed shipyards and lengthy construction times, but also because of these impending regulatory changes. This combination of factors sets the perfect stage for tanker rates to skyrocket. And how high can they reach? Well, nobody knows, but here's what Frontline CEO said when asked where we are in the tanker supercycle.
Where are we in the party? Like, is it early in the party? Should we stop drinking alcohol, switch to water, because you don't want to be the last one closing, closing the party. So if you get the analogy. So where do you define this cycle in terms of where are we?
Well, I think we haven't, we haven't even sat down for dinner yet, to be quite honest. So for this analogy, I imagine, we're having, drinks first, then we sit down for dinner, then obviously we're going to do some dancing and all that stuff. And in Norway, as you know, we do an after party as well. So we actually don't really go home until the sun is up. But we haven't sat down for dinner yet, I believe.
So that's why, even after more than tripling my money, I will still not take profits. I will just let this trade run. Because as it seems to me, we are just in the beginning of this tanker bull cycle. Well, that's it for today. See you next time.